Hi everybody, I'm Vijay Bhambwani and today I'm with you because I want to talk to you about my style of trading, the financial markets that I trade, what our company does, and a brief intro to what behavioral technical analysis is all about. You see, I've been trading for 34 years now, 27 of which were as a promoter of an incorporated company that trades all kinds of assets: commodities, equities, forex, derivatives of all types, you name it, we do it. Over the years, I have refined my style of trading as an amalgam of many styles. It's like being a financial markets chef, really. You add a lot of ingredients and they in turn bring in with them unique flavors of various asset classes, various hues, and various trading systems. So it's not just plain vanilla technical analysis or basic chart reading, because it goes far, far beyond. Chart reading itself has evolved since the time I started trading in 1986. Yeah, that's right, that's way back then. Back then, it was just price and volumes with some price patterns and oscillators which were thrown in for a good measure. Now, the era belongs to behavioral technical analysis. Where the how and why matters just as much as what. So we look at the volume, the open interest, where they converge, at what price point on the time price continuum, and basically that brings a whole new meaning to the chart with some amount of predictability. I say some amount because I don't think anybody out there in the financial markets can claim to have laid their hands on a system which is 100% bulletproof. To that extent, the kind of behavioral technical analysis that we deploy begins where old school technical analysis actually ends. Believe me, the difference is as big as chalk and cheese. And then we deploy a mix of screen reading. You try to gauge the subtle nuances of the doers of deeds as against all the noise that's invariably present, created by the bystanders, the non-market participants, the static that is created by the social media, which is so omnipresent nowadays about financial markets. And we have in our arsenal various tools like snapshot windows that you'll basically see on your screen, the VWAP windows or the volume weighted average price windows. We process a multitude of studies to follow the money trail. I believe that it's important a trader follows the money rather than just talk. Talk in financial markets is cheap. I would go to the extent of saying that talk is free. All right. So that way, following the money trail gives me a handle on the cause and effect theory. The process is entirely rational, it's scientific, and it's emotionless. There is also statistical analysis, which is the process of following the money trail again. Do remember that our markets nowadays are digital markets. They are computerized and we follow what is known as the order-driven system. So every buy and sell decision of the trader leaves an audit trail in the market on the open, high, low, close, and open interest of every script that's traded on the financial markets. So if someone triggers off something unusual, I want to try and figure out what it may be, which is a pretty well-rounded and broad approach to the markets as you can get. You see, how you observe the markets decides what kind of a worldview you actually wind up getting. An army soldier, for example, with a shoulder-mounted missile launcher sees things horizontally. On the other hand, A bomber pilot planning to drop a payload of bombs on a target sees things vertically. What we endeavor to do is get a 360-degree worldview, which is what we basically aim for, to get a well-rounded 360-degree worldview of the financial markets. Going back in time in our journey, I told you I started trading in 1986. Our company was incorporated in 1993. But starting from 2007, we started developing our own in-house tools to read the signals of the markets in our own unique fashion. Some of that work is put up on my social media accounts every day. If you choose to, you may connect with me on my social media accounts, and basically we can start exchanging ideas right away. And I'm looking forward to that actually. Now, some of the work that we do is basically showcased out there. For example, take a look at this. The index basis analysis that I put up every day. It's basically nothing but the Nifty 50 and the Bank Nifty. It's so simple that we're actually surprised nobody thought about it all this while. And you know what? You can hold me on to this. It has an accuracy hit rate of over 90% in calling out the broad expected direction of the markets. It's such a simple statistical tool that it's surprisingly been ignored all this while. So, like I said, the difference is not in what we do, but in the way and how we do it. And I would emphasize on the fact that the simplicity is actually the USP. I believe a first-year college student would be able to grasp it right away. I would know because I've trained thousands of college students during the last 2 decades that I've had the pleasure and privilege of being a guest lecturer at universities, colleges, the National Stock Exchange Training Academy, the Bombay Stock Exchange Training Institute, the Multi-Commodity Exchange where I used to train people in systems trading and commodities markets. I've lectured and trained and mentored at business organizations, clubs, etc. So we basically know that there is nothing that works as beautifully as simplicity. As long as you keep it simple, you get your ideas across to a whole lot more people. And what we have done to that extent is basically created protocols and procedures which must be met before we are good to go and initiate trades in the financial markets. Then again, these statistical tools must be confirmed by other screen reading, behavioral technical analysis, and we confirm that there is no hostile or adverse news flow before the market opens which can go against us and hit our trade in the gut. So this system, being fairly well-rounded, takes care of us in a far more better fashion than any plain vanilla rush into the trade kind of a trading system, which is why I call it a 360-degree worldview of the financial markets actually. And before we put in a trade, we actually check it with other asset class markets out there. For example, before we want to trade crude oil, we check currencies. What will be the impact of the invoicing currency, which is the United States dollar, on the settlement price? What is the cost of carry, which means the interest that financiers charge to the bulls for every settlement, and how it will impact the price of crude oil? Take, for example, April 2020, when the crude oil prices made history of sorts by going negative. That's right, crude oil prices actually hit negative. I pointed out on my social media account that the cost of carry before crude oil prices actually inverted into the negative zone was a whopping 420% on an annualized basis. Can you think of conducting any business out there after paying 420% interest per annum? Just not possible. So the crash was actually triggered by a statistical means which was there for everyone to see. Unfortunately, it went unnoticed. We bring all these things to notice. We also check what bond yields are signaling. Are they signaling greed, or are they actually signaling fear? I go to the extent of monitoring even fresh fruit and vegetable prices in the sabzi mandis or the vegetable markets to basically get a grip on the real effective street level inflation, which is then run through our statistical models that we've created in-house, like I told you, from 2007. Then a few minutes before the market is going to open for trade, I check for major geopolitical news. I've created a list of must-watch characters whose statements and or actions have major impact on hard assets as well as paper assets. For example, before trading crude oil, I would want to see what Muqtada al-Sadr, Shakib Khalil, Bijan Namdar Zangane, Rafael Ramirez, Nicolas Maduro, etc. These are some of the people I watch every day for any kind of whiff of kind of statements from them, whether they are likely to act in the market, they are dormant, what they're doing, because hey, anything that impacts my trade and impacts my money, I want to know. I also monitor many unorthodox organizations. So what is Al-Shabaab as an organization doing in Ethiopia or Eritrea? Is there any statement from Boko Haram in Nigeria? Is Al-Qaeda getting active all over again in any theater in the world? We want to know everything in the melting pot of geopolitical news, which might get thrown at us after our trade has been initiated. So we like to get updates on the situation at the ground level from a vast network of friends that I have cultivated over the last almost 3.5 decades that I've been in the game. And this approach is something that I call boots on the ground, eyes in the sky. Boots on the ground is the physical presence. Eyes in the sky, remember, I want a vertical as well as a horizontal view of the financial markets. Basically, the whole idea is to take emotions out of the system as far as possible. And though it's not a 100% black box trading system, which means automated algo trading system, it does get rationality based on the cause and effect theory. So we know what causes what to happen in the market. Therefore, we can gauge how long the impact of that what will last on the price. So when we get the magnitude of the cause, we can estimate the amplitude or the distance that the price will travel, which we've created on our statistical models to help us trade like a new age hedge fund manager. Heart of heart, secretly speaking, I do have ambitions of someday having my own hedge fund. But that's keeping fingers crossed. You know, just as birds talk, animals talk, markets talk too. It's just that the market's language is different. The digital markets are nothing but the result of buy and sell decisions of all the participants, which is actually displayed in numerical format. If you were to learn to decipher the signals using mathematics, mass psychology, behavioral finance, and statistical come mathematical tools, your life actually becomes a whole lot more simpler. Now, why am I here on social media? It's simple actually. To reach out to like-minded individuals and corporates so that we can help each other shorten our collective learning curves in the financial markets. Besides, behavioral trading systems that I pioneered in India and taught since over a decade and a half ago are floating in the cyberspace in a very watered down, poor, misrepresented version used and abused by people. I'm told that imitation is the best form of flattery. Very frankly, we've been flattered so long all this while that we don't find it funny at all. So I thought I'll put out the facts as they ought to be, as the real stuff. Behavioral trading analysis the way it ought to be. Welcome to our world of 360-degree worldview of financial markets where nothing is left to chance, and chance, as they say, favors the prepared mind. Have a profitable day. Do spread the word of what I just said and help me reach across to people and help them become super traders. This is Vijay Bhambwani signing off for now. Do subscribe to my channel if you liked what I saw. Let me know in the comment section what you think about this video, because I'm planning to put up a whole lot of content over time. See you in my next video. Do take very good care of your trades and investments. Bye-bye. Thank you.